Testing Your Strategies Live. In this installment of Testing Your Strategies Live, we're going to be going over a moon-based strategy, everyone's favorite type of strategy, the most controversial strategy we've ever spoken about on this channel ever. But I wanted to get into this one from Saberi, who is putting a little bit more context on the general moon strategy, which we've brought up on this channel many times in the past. Now, before we get into this, I do want to say, look, I don't care what is the underlying mechanics of a strategy. All I care about is the statistics that accompany it. Whatever those are is how I judge strategies and their efficacy. And in this case, I want to first show off the original, the OG moon strategy. This is with no optimizations or anything like this. And as you can see, the equity curve generally up and to the right, generally good, but, could certainly be smoothed out, could certainly be made better. Now, this post here from Saberi is putting some extra context on this strategy, suggesting that we should try a different setup in particular. I don't think he's actually tested this out himself, but he's referencing this material here, and he is suggesting to change the entry and exit in terms of the days after the moon signal happens. Anyways, let's just get into it with an actual example. How about that? I think that's going to help a lot more. So again, this is the general strategy right here. It's okay. It can give you a general idea of when you should generally be looking to the upside versus not, but it certainly ain't perfect. So let's try out his changes here. I'm going to bring up the skeleton key, and of course you can actually do the same thing yourself. You can actually use the skeleton key as a part of the Quant Prime service, which is actually 20% off right now for the good old summer sale. But even if you're watching this in the future, there's still a 7-day free trial if you want to just try it out and fuck around with it. But going into this one, let's reference exactly what he's saying. So let me go into it. He is suggesting an entry criteria to enter on the daily close that occurs 8 days after a full moon. So how do we put that into the skeleton key here? Well, let's choose our full moon, and we are going to make this condition greater than 0. That just means as soon as we have a value for a full moon, which will happen when a full moon comes, then it will initiate an entry. And then he is suggesting to enter 8 days after. 8 days after that particular signal. So for that, we use the historical bar index, and I'll put an 8 right there. Okay, cool. Then we come back here. His exit criteria is exit on the daily close that occurs 7 days after a new moon. And so we shall go back into here. We'll select new moon for our next threshold condition. We'll make that above 0 as well. And we will put in an exit. And you know what? Just to see it again without any optimizations, let's see what this would look like just as it is. Yeah, again, not great. Certainly not something that I want to play myself, but it is what it is. Oh, and by the way, just so that we can make this this testing, a little bit more standardized, I should switch around this to the same numbers that we were using on the prior one as well. So just so that we can compare them directly. So yeah, not terrible, but could be better for sure. Could definitely be better. So let's now apply his changes. We're going to, again, use that historical bar index to reference where we should actually take that signal. So for the entry condition, it is going to be 8 bars after the signal. And then for the exit signal, it is going to be 7 days after the new moon, that is. So that will be this one right here. Boom, 7. Let's see how that improves things, if at all. And we can see that, wow, we can see that already total P&L just jumped up a shit ton. Let me just scroll back here. Can we do that? Yes. So we went up from almost 3.2 million P&L in total P&L to almost 11 million, and that profit factor went up significantly. The profitable trade rate actually did not change that much, but that's okay. This one's just getting better entries, I suppose. Okay, so let's go back into his comment here. He is also suggesting a risk of a 10% stop. Okay, so we're going to do a risk management by percentage here, and we are just going to put in 10. Let me get rid of this for now as well. Don't need that. That actually does bring it above 11, so not bad. All right, so let's try it as he stated. With a 10% stop loss, actually our total P&L goes down a little bit, as does our profitable trade rate, as does our profit factors. So to me, that is across the board not as good. So I'm actually going to take that off for right now and just look at this, because this is actually like pretty decent as it is. I would certainly like to optimize this more recent part, because it is starting to lose its overall upside curvature, although it does still have positive curvature on the equity curve. So that is good, but I think that we can make this better. So let's play around with what is usually my first port of call when trying to optimize a strategy, or among my first ports of calls. And for that, we're going to apply a day filter, meaning that we can essentially take off a day of trading and just see if there is any particular day that has outsized bad returns or outsized negative returns. So I'm just going to go one by one. We'll see how these stats evolve from here. But again, remember 11, 11, 11. That's your, okay. So Monday off, we lose about half of our total P&L. Hell no. Must keep Monday. Monday is a good bullish day. Tuesday, let's try this one off as well. Lost a couple million there, so let's maybe put that baby back on. Let's take off Wednesday, see what this one does, and again losing almost 1.5 million. So I think we shall put that on. And then Thursday is usually a bad day, but in this case, it does make the results a little bit less good, but still, we would rather keep that, obviously. Friday, let's see, Friday, don't really know what to expect on this one. It very close actually, but did get a little bit worse there. Let's try Saturday off and see what happens here. This one also reduces the results. And then we got Sunday as well. And let's see, maybe we keep all these days. It seems to me like keeping all the days is the right way to go. So we will keep it as such. Anyways, moving on from there, let's get into the maximum stop loss, maybe even try a maximum take profit. But I think already as this is, like, this is a massive improvement over this. I mean, for fuck's sake, like, obviously. And so we don't want to get like too cute with this. That's my main point. We don't want to get too cute with this. You know, good enough is good enough at the end of the day. So maximum stop loss, let's go. We'll start with 10. I'm just going to play around with numbers. And yeah, 10 again does not really help us out. It reduces profitable trade rate, reduces profit factor, reduces total P&L. So that is a no-go for me. Let's try maybe just one integer less than that and see if that helps out. Yeah, that's, I mean, improved it a little bit, but still not better than the original. It seems to me like the original is probably the one to be rolling with. Yeah, 8, 7. Yeah, this is just making it worse and worse and worse. Just try 5 just to see if there's any sort of thing right there. Yeah, not working. So you know what? I'm going to go back into this. I do realize that I'm probably not testing all of the history here. Let's see if there's a... yeah, there is a date range. So I'm testing from 2016 to current. So let's now match these two up. Let's match them up and see if we can optimize from there. So now I'm going to basically just be focusing on the past 10 years or so. And we shall start, what was it, 2016? Yes, 2016. Okay, boom and boom. All right, there we go. So this is now comparing the same date range for both. And actually, we can see, even then, this is still much better. It's more than 2 times better in terms of real results. Profit factor is above 2.1. Total P&L is 2.3.5. And that, yeah, that is significantly better than what we have over here. And also the P&L curve is much smoother. Now, let's go through these same metrics that we did for the full history and apply it just to this period, the past 10 years, which I do kind of look at as more relevant, to be honest. But of course, we want to start off with the full history to begin with, just to get the full picture and then work our way down from there. So let's play around with the day filter again. We're going to take off Monday, see what happens. And the results get worse, so we keep it on. Tuesday, see what happens. Results get a little bit better, actually. Small amount, but it does get better. Profitable trade rate goes up a small amount, so let's keep that one off. It's not a humongous differential, but significant. Wednesday, definitely keep that on. Wednesday is almost always a nice and bullish day for most long strategies. The Thursday, again, going to ruin that one, so we definitely keep that one. Friday also going to increase those results a little bit. More importantly, if you notice, the profitable trade rate just jumped up quite a fair bit above 61.1. If we, again, include Friday, that goes all the way down to 57.25. So that, to me, is very significant alongside increasing the total P&L. So to me, that says, hey, we want to take that one off. Saturday, Let's see this one, again, reducing those results. So hell no. And Sunday is also a hell no. So it seems to me that Friday and Tuesday are the two biggest ones that have positive effects. If we put back on Tuesday, again, it doesn't really change it that much. And I might even say that I'd rather want those extra total trades, but I'm going to take it off for now, just to keep it. Okay. So here is what the equity curve looks like now. Let's see, actually, does Tuesday increase its curvature here? That would be good. No, it doesn't. All right. Well, that's fine. Okay, we got a profit factor now above 3. Okay, so we increased that nearly 40% from the original. Profitable trade rate went up close to 10%. Total P&L went up a lot. Don't even remember the original one. Now let's try the same changes that he was suggesting. We're going to start with this max stop loss at 10%. See how this changes things around, and it does change things around a little bit, but not in a good way. So I'm getting rid of that one. Let's go down to 9. Let's start high, go low. I like to choose a lower stop loss percentage if possible. And again, not really helping us out. So I don't necessarily like what I'm seeing here. In fact, if I just take it off, yeah, you can already see this portion right here really improves a lot. So I'll try a very low one, then we'll try some higher ones, but I'm already kind of getting the inclination that this is not going to be the way to improve this one. This one you just kind of have to let run, which does mean if you don't have a traditional stop loss, then this is not a strategy to be using high leverage with. I'll tell you that. The higher that I go here, the more and more that it does help out, but I don't think that that's the way to take things. I think that this would be a strategy to play either with extremely low leverage, if you're going to play it at all, or to be used in the background as sort of like a green light for other strategies during those same times. So only trade a long strategy on the hourly time frame when this one has an active entry, for example. We can also play around with the take profit. And let's actually see first in the trade analysis what the average return was. Average winning trade 14, spot 18. Average losing trade 737. I mean, honestly, I like these already. I really don't want to fuck around with this one too much, because I do like that sort of a spread. But let's just see. So like I said, it was 14 on average. If we put a maximum take profit at 14, I can already tell you it's not going to be better, but let's just see what the results would be. Yeah, reduces them a bit. Actually does help out some of the curvature of the equity curve, but not worth it. Oh, I put in 14. Yeah, 14. Let's try higher, not lower, but definitely higher. Again, not helping it out. Let's maybe go all the way up to 18. A little bit better, but how many trades are really even getting closed with the maximum take profit here? It's probably just better to let it ride. Yeah. I'll just for shits and giggles, I'll try a lower one, like a 10%. Let's see how this one improves things, if at all. Again, increases the curvature a little bit, but I don't like the result. The results are, worse on every metric that actually really matters. And let's just play around with another one just to see. Yeah, 7%. I mean, we just nuked half of our profitability, more than half of our profitability, but we got a better curvature on the equity curve. So it's like, what do you want? Well, no, of course we want the profit. So yeah, I would put this in the basket of strategies to use if you are going to use with a very low leverage. But I do like having an emergency risk stop at the very least, but yeah, even that's not really going to change it much. So we'll take that off. All right, there's one last thing that I'll try here for optimizations, but I think that this one honestly is okay as it is. And we're going to apply a trend filter for this time frame, meaning that the daily time frame must be in an uptrend in order to initiate entries. And again, the equity curve, gets a little bit smoother here, but the results are not, well, in terms of total P&L, it is not better. In terms of other things, it actually is better. The profitable trade rate did go up. So hit rate went up, profit factor went up as well. So you're getting less trades, but those trades are more likely to win. And I'm guessing that one of these metrics here is probably going to be better as well. Average winning trade goes down a little bit, and average losing trade goes down a little bit as well. So yeah. In my opinion, this is one of those examples where I'd say, look, if it ain't broke, don't fucking fix it. And for that reason, I would just leave it as such. Maybe we could try like a higher term time frame trend filter. See, this is the problem when it comes to optimizations. There's no real limit to shit that you can test, but let's just see, like, what about a 2-day time frame uptrend? So instead of a daily, now it requires a 2-day time frame. Again, oh, wow, really drops off recently. So no, we do not. Sorry, that was a 2-hour time frame. Jesus Christ, I am redacted today. Let's try 2 days. All right. Better. Actually, not terrible, to be honest. It's really not. But, okay. Again, curvature gets a little bit better here as well, but yeah, I would say not necessarily what we want. I'll try a 5-day as well, just to see. Okay, 5 days actually, again, increasing that curvature. We like that, but you are losing out a little bit on P&L. So that just kind of begs the question, like, do you want to exchange a higher hit rate for less total P&L? Or would you rather just get the extra P&L? Yeah, again, same thing over here as well. So to me, I would actually play this one as stock standard in the way that we originally tested it out, and I would just kind of let this one run, honestly. So yeah, as far as what Saberi is suggesting over here, the 10% stop, in my opinion, is not ideal. I think that this is a strategy that if you are going to play, you play it with very, very low leverage, if any leverage at all, and if you are going to apply leverage, then yeah, you will need at least some sort of a stop, because you can't just leave that up to chance, on a crazy day. But as you saw, that really does start to eat into your results overall. So in my opinion, like, if it ain't broke, don't fucking fix it, man. Don't fucking fix it. Other than that, I don't want to be adding any other indicators to this one. The question for this particular strategy was just, can you test this? And I just applied some very, 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 very minimal optimizations, which I think is the best way to go. Yes, this one has been kind of trading sideways here for a while, but that's not uncharacteristic to the past. We can see this did happen before. I imagine this was around 2019, 2020-ish region, going a little bit sideways. It's like a chart itself, right? It consolidates sideways and then breaks out again. And I think that's what we're doing over here as well. After making the all-time high in terms of P&L, this would have been in late 2024. So yeah. Anyways, I think that's a good place to leave off on this one. Nice and short and sweet. And again, just a good example of a pretty simple strategy here that, does seem to have positive results. It's definitely struggled, in 2024. That's for sure. In late 2024, I should say, after a really good early 2024 and 2023. So there is that. But yeah. Anyways, we'll leave it at that note. Again, if you want to use this tool or tools like this, or test any sort of strategy really that your mind can come up with, check out the Quant Prime service. It's linked in the description below in Teachable. It's also offers 7-day free. So, you can basically just try it out and see if it's relevant to you or not. And then it even comes with an AI chatbot that is trained on the data as well as possible at this moment. And, can answer pretty much any question, assuming that it's like, about the Quant Prime service, right? Because people ask it all sorts of crazy questions. I can tell you that. Usually not to do with the Quant Prime service. Anyways, like I said, we'll leave it at that, and I'll see you in the next one. That's it for this edition of Pimp My Strategy. Take care, much love, and see you hopefully tomorrow.